Books the Biz, a podcast that looks at both the financial and operational sides of success. Please welcome our hosts, Dan Paulson and Richard Veltre. Dan is the CEO of Envision Development International, and he works with leaders to increase sales and profits through great cultures with solid operations. Rich is CEO of the Veltre Group and a financial strategist working with companies to manage their money more effectively. Now on to the podcast.
Hello and welcome back to Books the Biz. We are here for another exciting episode. Rich, how are you doing?
I'm fabulous.
You're in a collared shirt. You must be working today.
I am working today.
Excellent. And we do have a guest, Nate Fair. How are you?
Fantastic. Things are cold and dreary here in Wisconsin. So
They are. It's a nice
course,
rainy
right?
day. Quite a switch from when we saw each other yesterday.
Absolutely. Yep.
But hey, we've been talking for quite a while, and I wanted to bring you on because you had some interesting perspectives from an investment strategy. So let's start off by, why don't you tell us a little bit about yourself and what you do?
Yeah. So I'm the owner of Hawksview Wealth Management with Raymond James, financial services company, and I help business owners pay less in taxes is ultimately what I try to do. And underneath that umbrella, that very broad swath, a lot of different tools that I can use. Some of them involved investment strategies. Some of them involve just being an advocate and holding the client's hand as they work with tax professionals to reduce their tax position. But ultimately, my goal when I work with my clients is to help them pay less to the tax man over the course of their investable lives.
Well, we like you already. That's a pretty easy way to get fandom here.
Yeah.
So what took you down this path? What led you to discover, how companies could save money, or, on average, do companies spend too much on taxes?
The answer is yes. And it's a long story. So I actually come from a long line of entrepreneurs, business owners, both on my side and my wife's side. My stepdad owned a company that used to manufacture pewter miniatures for role-playing games like Dungeons and Dragons.
Mm-hmm.
So I was kind of exposed to that entrepreneurial mindset as early as 8, and saw some of the things that he did well, some of the things that he struggled with. I had aunts and uncles that owned businesses, medical practices, things like that. When I got to know my wife, and by extension her family, turns out that there are several entrepreneurs and business owners on that side. And the constant refrain, regardless of industry, regardless of tenure, regardless of gender, regardless of success levels, was that taxes were a pain for business owners. So I constantly had that in the back of my mind, knowing that I didn't want to be an accountant. No offense to any of our accountant friends that are out there, but I knew that I wanted to do something more on the investing side. But I knew that the people in my business were really just trying to sell mutual funds, stocks, bonds, investment services, things like that. So I knew that there was kind of this neglected area, the crossover between the accountants, the tax preparers, the true CPAs, and the financial advice side. There was that neglected area in the middle, and I wanted to be the guide for clients to kind of navigate through that. I work only with closely held smaller businesses under 50 employees here in the southeastern Wisconsin area. So I also knew that there aren't a lot of people like me in this area to be able to help answer those questions. So that was kind of the genesis of this. So I wanted to be different, basically.
Well, that is good. Now, you talk about these 12 tax strategies, and you said you're in southeastern Wisconsin. The strategies you're talking about really can almost be utilized anywhere in the U.S., can't they?
100%. Yep, absolutely. They're based on the IRS code, so they are federal, and there are only 12 that we start with. So these are just the teasers, right? These are just the conversation starters. I tried to, again, give away information. I try to be an educational resource as opposed to somebody with my own agenda, right? I want to make sure that I'm kind of preempting some of the questions that maybe are on your mind that you don't even know how to ask as a business owner. by bringing up these 12 ideas. And, they're not earth shattering. I always like to say that my competition isn't the advisor down the street. It's Google, it's Siri, it's ChatGPT, because more and more I'm hearing people say, "Oh, I asked Google how to do this." I just talked to a client yesterday, and we were talking about estate planning, and she's like, "Oh no, I've got that covered." So tell me more about that. She was like, "Well, I Googled this and I Googled that," and I'm like, "Oh, okay, so this is where we need to restart." So yeah, it's just kind of a conversation primer more than anything else. And, it goes through some of the basics, right? Like, are you incorporated or are you not incorporated? Do you have the right business structure, first and foremost? Do you have the right team around you to ask you the right questions, answer you honestly and not nicely, but kindly if you're wrong, or if it's a hard answer? So that's the second one. The third one, really, you kind of get into, wage conversations and hiring your kids and on and on and on.
So what do you see as the biggest mistake that most business owners make when it comes to
assuming that their CPA is a proactive resource for advice? It's a very simple answer. I see it time and time again. Oh, my CPA does that. Oh, my CPA does that. And it turns out that, well, they have actually hired a bookkeeper, or they've just hired a payroll company, or most accountants, in my experience, are processors. It's like they're a living version of TurboTax. They just kind of spit out what you put in, and there's no strategy or advice behind that. The ones who are worth more than their weight in gold are the ones who can do that, can do bookkeeping, can do all these other services. Maybe they know the right people, or they have the right who's to offer to their clients. But then they're constantly saying, "Hey, by the way, Dan, you should take this deduction. You should sell your personal truck to your business, and here's why. You have a new tax credit you need to take advantage of because you did energy efficient lighting in your warehouse, and here's what that looks like. Hey, by the way, did you hire any veterans in the last year? No. Are you looking to hire veterans? Here's what that might apply, what that might mean to your bottom line." And just being proactive. Those accountants are worth their weight in gold.
I agree with you. They're few and far between. Usually, at the end of the tax year, you get this nice long form to fill out, put in all the information you would expect them to know or collect.
Yeah, and what is that
80%
long
of the work?
Behind? What's that long form behind?
Yes,
the bill, right?
The bill.
Exactly.
Exactly. Well, Rich, you're the finance guy, and you also have the accounting background. So I'll let you take it from here. What questions do you have?
I have one main one that kind of popped into my head is, do you have a size of person, family, business owner that really benefits more from working with you as opposed to just kind of going forward with that, tax preparer, handing in the form and just, let's just get this filed, consultant versus compliance?
Yeah. So my ideal client, or I'd say like my average client, again, is the business owner, for somebody or for a business that is between 1 and 50 headcount. I have some clients that are in that brand new startup phase of their business. And the tax advice tends to be a lot more general. It tends to be a lot more education based. Here's why you might want to consider employing the Augusta rule, for example. Here's what employing your kids might look like. Here's what the difference between an LLC and an S Corp and a C Corp is. Whereas the exiting entrepreneur has a totally different set of needs and desires and timeframes, monetary assets, all of that stuff. So then we get into conversations more about things like cost segregation and 179D deductions and premium financing and life insurance. How do we help create a legacy for you personally, but also make sure that the business is handed over to the next generation in the manner that you want, that you, the business owner, really are hoping for. It's really easy to go one route if you want a high dollar amount. It's really easy to go another route from an exiting an entrepreneur standpoint if you want the business to be owned by family, et cetera, but then being able to explain all those different options. So long answer to a short question. It really depends. And I want to make sure that I'm assembling the right puzzle for the right people.
Okay, understood. Yeah, I think what I've run into is the solopreneur is the first one to ask you for advice on what deductions they can take. And, you almost want to answer them back with, hey, get over the first hurdle first. And then we can talk about, special strategies, because if you're not making the money, don't worry about the taxes.
Yep.
So there's definitely at least one hurdle before you can get into that, high level planning.
Yeah, that is usually a kind of a preemptive conversation. Let's make sure that you're post revenue before we start working on reducing the revenue.
Yeah.
As far as the eyes of the IRS.
Right.
But yeah, again, I mean, you touch on a good point. The needs are so different. Startup, maintenance to exit strategy, it's the same person, but the needs are so different across that spectrum. And again, I'm blessed to have the network around me that I do, to be able to say, I'm not the expert on that, Dan is, but Rich is. I'm not the expert on the commercial lending side of things.
Right.
But I know somebody who is. So again, I kind of put myself out there as product ambivalent, service ambivalent, but I want to make sure that you have the strategy and the plan, and then the advocate that's going to be on your side to help you execute on these things.
Okay, gotcha. I've run into that a number of times. And I think I'm very interested in your take on S Corp versus single member LLC, because everybody has that question. So I'm very curious. This will tell me everything I need to know about you.
So don't screw this up, is what you're saying. Honestly, it's all going to come down to the client's goals. And again, I know that this is a financial advisor compliance driven answer, but it's really going to come down to the client's goals and their time frame. If they truly intend to keep it a smaller business from a headcount standpoint, from a revenue standpoint, yeah, probably the LLC makes more sense. If we're going to start talking about more advanced tax strategies, cash balance plans, stuff like that, the S Corp is probably going to make more sense. Do you want more of the pass through, or do you want more of the liability protection, the barrier between you and the business? And a lot of those solopreneurs, they think they want the S Corp, but they really need the LLC. And then vice versa. There are a lot of the people in the LLC world that should absolutely be an S Corp, but they're still kind of clinging on to what their dad did, right, or what they originally, their first accountant told them to do. Yeah. So hopefully I passed that test, but.
Okay, Dan, I love this guy. I absolutely love this guy. It's awesome. It's really awesome.
Yeah.
All right. So let me throw this out there. LLC taxed as an S Corp. What's the difference?
Man,
see, this is where I bring in the CPA. This is honestly.
All right, Rich, you answer it.
Nothing.
Versus.
If you're an LLC and you make an S election, you are an S Corp.
Okay.
So it doesn't matter. An S Corp is a tax election.
Yeah.
So it's essentially, you're either a C Corp underneath or you're an LLC underneath. But once you file that form, you're an S Corp. So it doesn't matter.
Okay, so I passed that test too. I just
there you go.
I didn't want to say something that was like the IRS was going to start knocking on my door here.
It's very funny. Water cooler conversations all say, "Oh, you should be an S Corp because you're going to save so much in taxes." And I had one guy who asked me that question, and I said, "Well, let's work it through." And he said, "What do you mean, let's work it through?" I said, "Well, you work through the numbers because everybody's different." I said, "If you're listening to everybody else, you don't have the answer." So we worked through the numbers. And I said to him, now I want you to make one assumption. I want you to put a maximum away on your simplified employee pension plan. I said, just set it as max and then run it as an LLC and run it as an S Corp. And they don't realize the way that the way that tax accountants are running around saying save money by jumping in an S corp, they're lowering the salary, which means they're lowering the amount of money they can put away in a SEP.
Yeah.
So once you do that analysis and you come out even because you put more away into your pension plan on a single member LLC, then all of a sudden everybody goes, oh, wait a minute, what are you talking about? Like, that doesn't fit my goals. And that's why when you said it comes down to the person's goals, I'm like, love this guy.
Yeah. I mean, I don't know. My industry, and it's funny because I've been only working with individuals again, because I was a consultant to guys like me for a long time. But I've only been working with clients again for 6 years. I've only owned my company for 3 years. What I see is that most people, what they categorize as a quote unquote financial plan is just a collection of stuff that people have sold them over years.
Yeah.
And it never has, they can never enunciate what the goals were that prompted them to buy that annuity or that life insurance or that investment strategy. They can never do that. And I want to make sure that the clients, not necessarily that they know, hey, this is what a cost segregation study is, and this is why I did it, and this is, how it works, and these are the forms that we fill. No, it freed up a ton of cash flow because I was at a front load depreciation. I want them to know the why.
Yeah.
And then know that they have the resources, the team behind them to support that, because then the why is supporting the overall goal. And then they can actually be excited to talk to other people about it.
Yeah. Cost segregation, people don't get it. All they see is, wow, I saved money.
Or wow, that's expensive up front.
Yeah.
But so we just did a cost segregation study for a client of mine recently. And again, I don't do the study. I bring in the person who does the study.
Yeah.
But again, I'm that connecting resource. And we went through this process, and they wound up being able to, I think the final number was like $290,000 more in their pocket this year than they were going to have. Which is going to allow them to buy another property that they thought was going to be off the radar because it was a time sensitive deal.
Yep.
And then the profit on that, and now all of a sudden you've just created this monster of a tax benefit for decades. I mean, between the buildings that they own, we literally can have decades worth of tax carry forward for them. And that's one strategy.
Yeah. It's
one of 12. One of 12.
One of 12 that's published. Yeah. So, and honestly, the Augusta rule, that's usually the litmus test that I use when I talk to accountants. What are your thoughts on the Augusta rule? And usually 70% of the time I get either, what is that? Or, red flag, audit red flag. You don't want to do that. And then the follow-up question is, well, if it's a red flag, tell me more about that. Why is it a red flag? And it turns out that most tax preparers, I'm gonna call them, either A, have never heard of it, and their reaction is honest, or they understand that they have to do more work and they can't get paid for it. Mm-hmm. So they just tell people it's a red flag. The ones who get it are like, oh yeah, that's a great tool. That person should definitely be doing that. Here's all the documentation we need.
So you brought up this Augusta rule a couple times.
Yeah.
And I'm sure it's not only some accountants who have no clue what it is. When you first brought it up to me, I went, oh, okay, I'll have to look that up. And I did. But for those who aren't busy looking it up on Google right now, what is the Augusta rule?
The Augusta rule, it's IRS code 280A. And it basically allows you as an individual to rent your home to you as the business owner for up to 14 days per year and receive tax-free income as an individual. And have a tax write-off as a business. It comes from Augusta, Georgia, where the Masters is held. There is a long, interesting story about how it all started, but it is absolutely a 100% legal way to have a write-off on your business side and receive tax-free income as an individual. I live near Erin Hills up here in Heartland, Wisconsin, and we had the U.S. Open here in 2017. And we had neighbors that were renting their houses for 2 weeks and they were getting $20,000. And it all kind of fell under the Augusta rule exemption from a rental real estate standpoint. And that's really where it sits, is rental income. And you can do it up to 14 days per year. It has to be for a legitimate business purpose. You have to document it. There have to be receipts of some sort or documentation of some sort. So there are always caveats with that. But again, I always tell people to, I can't give you tax advice. Let's work with your accountant on that.
So all this being said here, it is good to go to your accountant, your tax professional, and make sure you don't just do this. Don't just Google it.
Correct.
Actually
Yep.
check to see if it's going to work for you.
I'm going to take it a step further. And again, hopefully I'm not stepping on any toes in my industry. But financial advisors, accountants, lawyers, many of the professionals that are closest to the business owner tend to operate in a silo. And it's not doing anybody any favors. It's doing everybody a disservice. If I, as somebody's financial advisor, am not working hand in hand with the accountant on what I'm doing, I might be working in direct contradiction to what they're doing, and vice versa. We might have an estate planning attorney or a business attorney that's structuring a business or a transaction or doing estate planning that's in direct contradiction to what the other two people are doing. So I always encourage collaboration, communication. I host meetings at my office or virtually all the time with the team of people that should be around that business owner.
Excellent. We do need more of that. And I think that's across all professions, accounting, legal. I think they all kind of fall into that trap where, they're perceived as the expert and they focus on what they do, but they don't realize the impact it has on what other professionals are doing for that individual or that company.
Yeah. 100%. And honestly, I think it comes from a scarcity mindset. I think there's fear that if I, as the advisor, or I, as the accountant or the attorney, include somebody else and I get challenged on that, now all of a sudden my status is less. And I've seen it go the absolute opposite way, that if I get challenged in a meeting on something, A, I learn something. B, the client is at the center of that relationship, and the client is the one that gets the biggest benefit from that. And then I also gain respect for somebody for saying, hey, that's not going to work, or have you thought about this? The ideas that I share in this white paper, the ideas, about cost segregation and stuff like that, they're not my ideas. They're ideas that I picked up from conversations with my idea partners.
So what have you found to be some of the other bigger mistakes that business owners make when it comes to finance or investing?
One, thinking they're an investor when they're actually a saver. And two, not understanding the difference between cost and value. An investor is somebody who understands that the market goes up and down. The investor is the person who understands that they're planting seeds today for 5 and 10 and 20 years from now. The investor is the person who understands market. You can't do market timing reliably. That's an investor. They understand that there is risk involved in every decision, whether it's choosing the right stock to invest in stocks or in your business. The saver is the person who calls on a day that the market is down 2% and is freaked out. The market goes up and down regardless of what your feelings are. The market does that naturally. The market is supposed to do that. That's a saver. That's one. Two, the cost versus value. I think it was Zig Ziglar that said fees only exist in the absence of value. Most people in our professions, again, these core professions to business owners, are horrible at portraying the value that they actually provide. Even if they're doing a great job for the client, they're horrible at quantifying the value that they provide to that client. I am not cheap. You're not cheap. Mm-hmm. Good advice is not cheap. But if you are providing 100 times the cost in value, then the cost just disappears, right? And I'm not saying that happens for everybody. I'm not saying that you do that, I do that. But if you're able to say, hey, this is the investment that you're making into your business or into your personal financial picture or your tax picture or your estate picture, and this is the outcome that you're going to get, that's portraying the value. And I think that a lot of people still focus on the quantifiable, the cost, as opposed to that value. But again, it's up to us as professionals to be able to portray that value.
I run into that argument all the time, especially with my clients that get stuck on, I can't be the cheapest, or, it's always about price. And you just got to explain to them, you can charge whatever you want, and people will pay that if they see the value is greater than what you're charging.
Absolutely.
So it doesn't matter what you charge, focus on the value you bring, and everything will work out fine. I was actually having a discussion with a prospect today. I said, this isn't a transaction for me. This is a relationship. I'm not looking at this at the dollar amount. It is going to be investment, yes, but I'm looking at not this year, but I'm looking at next year, 5 years, 10 years down the road, still being a valued asset to your business.
Mm-hmm. Absolutely. And I think a perfect example of exactly that, what you're saying, it's not a transaction, it's a relationship. My goal is to build the financial plan regardless of where you execute it. Right. So it's, I try to portray myself and position myself as the true fiduciary, the person who is giving the client the good, the bad, the ugly, but also the execution steps to improve. And I'm going to be that advocate walking with them, again, whether they execute with me or somebody else. And what that does is it kind of, like you just said, it helps portray the cost as the investment to then make sure that they're actually reaching their goals. Because most people, for a financial plan, it's two inches of paper that collects dust. And it's that collection of stuff they've bought over time. It's outdated as soon as it's done printing. And it has to be a living, breathing document. So it has to be a relationship. Communication is key. It has to go both ways. There has to be expectations. My kids are 17 and 19 now. And when they were younger, my wife, and I credit her with all of the research behind this, but she described how kids perceive their parents' relationship, right? Their authority and how they learn how to push the rules. And just picture being in a box, right? The dimensions of the box. So as a child, as a client, if you can clearly define what those barriers are, the clients are going to push right up to them, but they're not going to try to push through them necessarily. But if those barriers are constantly changing, the expectations aren't clear, it's like a kid in a wet paper bag, right? And they're constantly going to be pushing and push through the barriers and overstep boundaries, or ask you to do things that you're not legally allowed to do, or they're not in your expertise. And now all of a sudden you're out over your skis, and that's where trouble occurs. So it's also about making sure that you're portraying the value and the expectations of communication both ways.
Yeah, you said communication so many times. It's like it's a bell ringer here in Books the Biz. So it's so important, and everybody wants to talk about accounting and tax and dollars, and everything has a tie into communication.
100%. Yep. Yeah.
So what's it like to work with you, Nate? How does somebody get started if they were interested in learning more about you or getting going with you? Do they fill out an app on your website? What do they do?
No. So I try to buck the trend there. What I usually do, so my website's hawksviewwealth.com. What I usually do is schedule a 15-minute conversation. And really the goal is just to make sure that I understand what you're trying to work on, and you understand the services I can offer, and then that we're a good fit. And I think I've shared with you, Dan, that kind of the last test that I have in an initial conversation is I ask people, if my caller ID shows up on your phone, what's your first reaction? And if it's anything other than, oh, it's Nate, or if I have the reaction, oh, it's Dan, how's it going? If I'm not excited to take that phone call, then guess what? We're probably not meant to be together, and I'm going to try to put you in touch with the right people. So that's the first thing. I always just try to have a, informal conversation, try to uncover the need, try to uncover the questions that are at the root of why we're even meeting. What can I do to help? And are we a good fit? And then from there, then we usually do a 3 or 6 month engagement. And there are very clear criteria as to what that looks like, what your expectations are, what my expectations are, communication schedule, and then ultimately what is delivered at the end of that 3 or 6 months. And then what's the next step beyond that? So we try to lay things out. I try to make sure that there's not just kind of this enigmatic ongoing fee that tends to be prevalent in my business. I try to be very clear about, again, all of that stuff so that we know exactly the parameters of the box that we're dealing with.
That's actually a good point to bring up. So are you fee-based or are you commission-based?
Any of the above, but it all starts with the plan.
Okay.
So again, I don't want to put my bias, my firm's bias, the industry's bias on a client by saying, hey, I'm only commission, I'm only fee-based, or I'm only fee only. It starts with a fee only relationship with that financial plan. So I do charge for my advice, but I also build that financial plan, and it has a fee associated with that. I don't ask for the fee until I've started to demonstrate the value. So we kind of get down the planning, the road of planning before I, ask for commitment. And then once we get to the execution phase, that's when we get into that deeper conversation about, should you be paying a commission for this? If so, am I the right person, or is somebody else the right person? Is fee-based the best relationship? And again, am I the right person, or is somebody else the right person for that? So the answer is all of the above. Back to the conversation earlier, it's really what's best for the client. The one guarantee that I or anybody in my shoes can ever offer is I always will give you the pros, the cons, and the costs of any decision I ever put in front of you.
That's excellent. Rich, you got anything else to add?
No, I think it all sounds good. He said all the positive points on my side. So,
So you guys like each other now,
That's it.
The networking dating relationship can be it.
Matchmaker. You're a matchmaker, Dan.
I am.
That's it. I'm in.
All right. Well, Nate, tell us a little bit more about how they get a hold of you. You mentioned your website once. Can you mention it again just for the...
Yep. It's www.hawksviewwealth, HAWKSVIEWWEALTH.com. You can also, if you go to LinkedIn and just Google Nate Fair or search Nate Fair, Hawksview Wealth will show up, and all my pertinent information is in there as well. So those are usually the two best ways.
Excellent. Rich, how about you? How do they get a hold of you if they need the more financial, the accounting strategy side of stuff?
The email is always the best one, rveltry@veltrygroup.com.
Excellent. And if you need to get a hold of me, because my email is too long, just go to danpaulsonletsgo.com. There's a nice form you can fill out there, and that'll get in front of me right away. So, Nate, thank you again for joining us. This has been a long time coming. We've been working on this for a while, but I'm glad we finally got you on, and actually on fairly short notice on top of that.
Yeah, absolutely. No, thanks for having me. I appreciate it, and look forward to more conversations in the future.
Excellent. All right, guys, thank you, and have a great week.
All right, you too.